meeting is being recorded.
All right, everyone, welcome to the Safe Spaces Pod interview. Today we're joined by a good friend of mine, JJ Woods. And JJ, would you like to introduce yourself?
Yeah, I'm JJ. I'm 1 year out of college. Scott and I met at Colorado College, good friends, living and working in Denver now.
Awesome. Well, nice little elevator pitch there. But no, so JJ is a fascinating guy. He's doing a lot of unique stuff for people his age, so it'll be fun to talk to him today. And so first off, I'm going to start off by asking JJ, I know you said you're in Denver, but kind of explain to our listeners what it's like to live in Denver. I know you've only been there for a few months, but seems like you are ingrained from what I've been able to tell.
Yeah, it's been really good. I got really lucky with my living situation because I get to live with two of my best friends from college, and we got a really nice house, thankfully, due to one of my friends who hooked us up. So we got a great spot. We're having a lot of fun. Denver's a great city, a lot of young people. So it's been great living here.
No, it's just a great place. It's got a combination of everything. I love that it has like professional sports teams. Like I think that's kind of a must for every city. And then they also like you can throw a stone to hit like a good craft brewery in downtown Denver. So like how far are you actually from downtown, would you say?
Like I'm walking distance from like skyscrapers. It's very close to downtown. Everything's walking distance from where I'm at. Like I said, it's a really great spot we ended up getting because of my friend's parents. We're paying a lot cheaper rent than we probably should. Great location, so we really did luck out in that sense.
And you were working 100% remote, correct?
I'm actually not. I work remote most of the time, but we have a small studio office in Parker, Colorado, about 30 minutes from here. So I go to that little studio office a couple times a week.
Okay. And so you brought it up. You have a studio office in Parker, but that's for Apollo, correct?
Yep. Yeah, the only people who use that are my dad and I. We're a company of two people.
So can you run our listeners through what Apollo does?
Yeah, so pretty much we are a predictive data company. So the goal is to use data to make money. The way we do that is mostly through financial data. So we'll take historical financial data, use it to make predictions, and then use those predictions to trade options. The other thing we do is we use it to gamble on sports, although that's kind of taken a backseat over the past year or so. The main focus of the company has really been financial as of lately.
And the question I had regarding the switch away from sports, was that to do with the margins being higher in the options arena, or is it to do with the fact that there's less like professional sports games to bet on relative to stocks?
It's all to do with leverage in the options world, right? If we really honed in on this thing, if things were really working well, we could put several $1 million in play for a week, no problem, right? The way it works with sports is one, if you were betting against a house, right, and you were doing well, they would shut you down, right? So there's no leverage. There's no leverage there. The other thing we do is we bet on what's called a betting exchange, where it's like people will post bets and you can go and match them, but there's only so much volume in that world. So it makes a lot more sense to pursue options because the upside and the leverage is a lot higher.
Definitely. And so how much market knowledge do you guys have to be successful in trading stock options? Like, I know you're an economics major. I'm not sure what your dad's finance background is, but where are you guys pulling the information that you use in your algorithm?
Yeah, so my dad actually has no finance background at all. He was a mechanical engineer in college. I don't really consider either of us all that knowledgeable of the markets. All we're trying to do is take data. So we will pull years and years and years of historical data on, say, like the symbol Ford, for example, right? And then we'll turn all that data and look at it, and we'll turn it into probabilities. So we'll say, okay, in any given week, right, there's an 80% chance that Ford could go this high, and there's an 80% chance Ford can go this low, right? We'll get this like whole big mess of data and probabilities and stuff like that. And then we'll take all that mess of data and probabilities, and we'll run it through testing to see, hey, with this data, what would make the most sense in terms of optimizing it, making money, showing good performance historically. We take all that, and that's what we base our decisions off of. But in terms of like financial knowledge, you know, what's going on with the latest jobs report, what's going on with inflation, we obviously look at all that stuff, but it doesn't really factor into any of the decisions we make. It's strictly data.
And is the data strictly stock price, like history over time, or is it like Ford has these type of financials at this time period of the year?
So the core data is strictly price movements, but that's not strictly what we base decisions off of, because we also have data that says, okay, if we're making a prediction on Ford and we think it'll happen 70% of the time, right? We want to also backtrack that prediction and see how well the prediction performs too. So there's kind of a two-step process where we have just the mess of data and price movements, and that's all historical. And then we take that into testing and optimization and say, okay, from what we have, what's been working, what makes sense. Then we apply that to decisions that we actually trade on.
Okay, that makes sense. And so just from you trading stock options, have you become more familiar with market trends? Like, for example, tech stocks fluctuate this certain way, or different types of asset classes have different types of movements. Like, have you been able to pick up on stuff like that, or is it mostly just like fine tuning your guys' algorithm?
I think there's definitely things, I pick up on a little bit, right? Because I'm constantly checking prices, seeing where our stuff is at. You're just very aware of what's going on because you kind of have to be. But I mean, I think if we're being honest, right, the market doesn't always make sense, right? So you might pick up on the fact that, tech is up today, materials are down, right? There's certain things that you can see trends where certain things are inverse, or um, certain news means certain drops. You pick up on those sorts of things. But in terms of like, do I have any guesses or ideas about what I think the market will do next? No, not really. I just have data, and I guess the data developing a track record that I believe we can make money off of.
Okay. And just for our listeners, can you explain at its bare sense like what a stock option is? Because I'm sure some people that come across this won't be entirely familiar with what it is. So can you explain to our listeners just bare bones what is a stock option?
Yeah. So an option is a contract. So when you buy a stock, what you're buying is ownership of a company. When you buy an option, what you're buying is a contract that lets you buy 100 shares of a stock at a given price, right? So if I buy the Ford $15 call, what that says is I have the option to buy 100 shares of Ford at $15 on a certain date. And the reason we choose options over just trading stocks is options will move very aggressively in price, right? Because, for example, if Ford were to rise above that $15 level, say to like $16, I can now buy 100 shares of Ford for $15 when it's worth 16. So that option increases heavily in value, right? you can make a lot of money off of that. Same goes for the downside though. If Ford were to remain below $15 and stay at like $14, right? That option contract becomes worthless. So the money off of it will bleed really fast. So the reason we choose those is we're banking on our predictions being right. And when you bank on your predictions being right, options tend to be more profitable because those prices will move a lot more aggressively.
And so then you guys cash out when someone buys your contract from you.
Yep. So we'll have a certain criteria for getting in, right? So and then once we get in, we'll have an exit target based on the underlying. So say we want Ford to move, 50 or 60 cents, whatever. Once we make that move, we'll just sell off the contract. We don't actually use any of our option contracts to buy shares or anything like that. We will always just sell them off early.
Okay. And so where does the premium come from? Like I've bought one stock option ever. I got crushed on it, but I know it's expensive. Like what am I paying for? Like what is that money going towards? Is it going towards a promise to buy those shares when the contract's up to fruition? Like what am I paying the premium for?
You're paying the premium for leverage, right? So you could do it in a lot of different ways. Say, for example, you were the owner of 100 shares of SPY, the S&P ETF, right? So you could use that as leverage because if you own 100 shares, you can sell options on your 100 shares. So you might say that, I might want to sell my shares anyways at this price. So I might want to sell all my S&P for $425. I can write a contract that guarantees that either I sell them for $425 or I just take the cash and the call expires worthless, right? Options give you different ways to leverage your positions. And when you're buying contracts, what you're doing is you're leveraging a move. You're making a prediction that that option or the underlying is going to become more valuable for you.
And so is the first contract that's issued to the person that initially owns the stock? Like, do you have to own the stock to buy the first initial contract issued and then it goes to a secondary market like where you and I could buy it? Or can we just buy a contract for leverage to start off?
So you have to own either the stock or the capital requirement of the stock to sell an option, but not to buy it, right? So if I want to buy a call, I don't have to own any stock, right? Because all I'm doing is I'm buying a contract, right? That contract doesn't require I own anything. That contract is just giving me the option to buy later on. And I don't even have to buy later on, even if it becomes profitable, right? But if I'm selling, I'm making a promise that I will sell you these shares at that price and 100 of them, right? So I can't sell the Ford $15 call unless I have 100 shares of Ford to sell you at $15 or enough money to cover the cost of all those shares at $1,500 or $15.
Okay, that makes sense. And so explain to our listeners a little bit about how you and your dad got into it. Like it's definitely a niche market. Like what piqued your interest here and how did you guys find yourself in the space?
Yeah, so how it kind of started for me was in college. He told me that he had been working on some stuff with sports. So it all started from sports. So after, basketball, after class, whatever, I would get like this list of like NBA probabilities, right? And I would like gamble on these NBA probabilities on my laptop and stuff. So it started with that. And then when COVID hit, like full on and everyone got sent home, I was still trying to make money. I was working as a valet driver at the time. So I was like valeting people's cars at a hospital right when like COVID was getting bad and it was stressing them out and stressing my mom out. So he pretty much told me, he was like, hey, there's a lot more work kind of to be done here because he had met this guy from London who wanted to do stuff in the finance world and with options. And he pretty much told me he didn't really understand options and that he thought I could help him out with it. So during COVID, I left that valet job, started working with him full time for the summer, and just started off by reading options books, trying to understand options. And he went off and started working finance data. And then later, we just kind of both grew our knowledge into creating something.
And so talk to me a little bit about that sports experience you had. Like I personally got to witness this because I lived with JJ. But so what would you be putting on that piece of paper? Because I remember vividly watching you write stuff on the piece of paper, or like I don't know, you're doing something with a piece of paper at all times. So you're saying that was NBA probabilities. What exactly does that mean?
Yeah. Well, the paper was the paper's just a schedule for me. So when we first started doing it, all we had was probabilities, right? So I would just go on my laptop and I would gamble on it. Um, the big thing that we do, and we do this in the finance world too, is we want everything to be automated, right? Because what we don't want is people sitting around trading options all day or sitting around placing bets all day, right? So we want the computer to automatically place things. So that was one of our big growth points in the sports world, is it became all automated. So all my papers are just a schedule to go and turn on the automated system, right? So if there's a English league soccer game at 8 in the morning on Saturday, I will go and run the code for our system to start recognizing what's going on in the game, and at the same time looking at our data, looking at our probabilities, and looking at the betting market to see if it can find value. And it's constantly checking for value to see if it can put up a position.
And so when you started, I know you said you were placing NBA bets. So you were physically placing the bets and then you got it to be automated later on?
Yeah, so when we first started, all we had was the probabilities. So we had to do everything by hand, which was terrible. It didn't make sense. That was the case for us in the finance world too. We had just an absolute mess, like trying to buy options and sell options on like Robinhood, and it was terrible. So yeah, automation has become huge for us. Everything we do is automated now. Pretty much the code will just look at our system, look at the market. It knows what it needs to do in terms of placing positions, searching for value. So yes, everything automated.
And who helped you do that? Like, was it you and your dad that wrote the code to get it to be automated? Or did you bring someone in to help you guys with that?
No, the code was pretty much mostly all my dad. I've done a little bit of stuff with code, but that was mostly all him. Like I said, he's a mechanical engineer. He doesn't have like any sort of coding background. He literally just kind of Google tutorialed his way to do this stuff. It Yeah, he just kind of figured it out over some years of doing it. He's had a little bit of necessity working with that stuff with some other jobs, but yeah, he just kind of figured it out.
That's incredible. I did not know that. So your dad pretty much would do the coding aspect just from like Google tutorials, and then he would give you the stock options book to kind of learn a little bit more about it.
Yeah, so in the finance world, so he wrote the code, right? So the code that actually sends orders to the brokerage, sends buy orders, sells or sends sell orders. He wrote all that. And then kind of what I do more is I do a lot of the testing stuff. So like for example, how far can we take something? What is the criteria for getting in? Taking those probabilities and finding out how we can optimize them and make money from them. I do a lot of that, and then I do a lot of the strategy in terms of, hey, you know, what option position are we going to take here? What makes sense in terms of mitigating our downside? when should we sell off early, things like that, right? It's when you do a business like this, I guess when you do any business, right, there's just a lot of barriers and different things that you kind of run and bump into. So I guess together we've just kind of, you know, found our way through those different things.
Definitely. And so I'm curious just for myself, what platforms do you use? Like what brokerage houses do you go through? Like what are your guys' mediums for exchange?
Yeah, so we use exclusively a brokerage called Matrix. Matrix was built for people essentially to trade with code. It's all programmed, designed for people like us who want to automate. So there's really only one other place you can do that. It's Interactive Brokers. The reason we did Matrix is because we know and work with the owner of Matrix. He is interested in what we're doing he's interested in our strategies we got now, but he's also interested in what we're doing from a potential retail perspective. So we've got a relationship with him. So we use Matrix, and he's been a big help because we've gotten a lot of support from the Matrix IT guys and different Matrix support workers because of our relationship with him.
Dude, that's hilarious. You know the company that I worked for last summer?
Broadridge,
Yeah, they own Matrix.
do they? I didn't know that.
Yeah, and it's funny when you brought up Interactive Brokers. One of my account profiles I did was on Interactive Brokers. I know a lot about that company. They're pretty. I think they're a pretty dynamic company. I like their CEO, and obviously it's a CT based company, so I'm biased, but that's pretty funny. Pretty small world there.
Yeah, definitely. Yeah, I mean there weren't too many options when it comes to doing things fully automated, right? But like I said, we don't want to have physical traders. What we want to have is, you know, we want to keep things small. We want to keep it a small family business, right? We don't want to hire 10 people to sit around at laptops and trade all day. So automation is really the only way we could go.
So it says that Matrix is a Colorado State chartered trust company. Is that something that you guys knew going in? Like, did you know it was a local company?
I didn't know that at all. The guys we work with are based out of Chicago. Maybe it might be called Matrix Pro. I don't know if that's the same people or not. But I know they're all the guys we're working with are from Chicago.
Okay, maybe it's a different Matrix. It kind of seems like it could be a common name, but either way, I know a decent amount about brokerage houses for some of my ages. So like I know the volume of trades that go through those brokerage houses every day, and it's actually incredible. Like there's trillions of trades throughout a year. Or maybe not trillions, but definitely billions.
Yeah, absolutely. And it's such a great business, right? Because uh, you still rack up fees, right? We still pay a lot of money in fees. I know there's a lot of fee-free brokerages right now, right? You got Robinhood and Webull and even Charles Schwab and Ameritrade and all these have kind of dipped their toe in doing a lot of these orders free. But if you're working with a Matrix Pro or an Interactive Brokers and you're sending a lot of orders with code and you're doing a lot of you're doing big lots and big option contracts, right? They're going to make a lot of money in fees, right? So aside from our relationship with their owners, I'm sure they love us because of the fees that they can rack up from it.
Definitely. And you used to use Webull. Was that for Apollo or was that for your own investing?
So when we started doing stuff with Apollo, what we did is we had a ton of different brokers because we didn't have $25,000 dedicated to it yet. So we were trying to kind of bypass some day trading rules. So in case you don't know, you need $25,000 to day trade, or you only get 3 day trades a week. But it's per broker, right? So if I had Robinhood and Webull and I don't know, something else. And my dad also had that, right? Then we're up to like 9-day trades, so we could play around with it more. So yeah, there was a time when we were like switching between a bunch of different apps, and honestly, it was a mess. I'm glad we're past that. It was terrible.
Yeah, no, that doesn't sound fun. I remember there'd be times where you'd be trying to execute trades and maybe they wouldn't go through, and then you just miss an opportunity to get a trade in. And like it was never your fault. It was always technical issues. But I know it was very time sensitive, so you need like all those platforms to be working correctly.
And the other problem is that options are a market. So like if you were to buy a share of Apple, right? The Apple ticker's at a certain price. You just buy Apple at, I don't know, $165.03, right? And it ticks around, but that is the price. With options, there's always a spread, right? So there's a bid and there's an ask. So there might be a bid of like $77 to $83 or something like that. And so if I try and split the middle at $80 and I don't end up getting it right, then I have to cancel and reissue the order, and it is time sensitive. That's another advantage of the code and the automation, right? It's like if we don't get something, the code will just automatically tick it to the next price. So we don't have to actually physically go in there and cancel the order and reissue it and all that. And that's especially important if we're buying like things across 25 to 30 different symbols all at once, right? It would just never be possible without the automation.
Definitely. And when you guys were placing stuff manually, is it mostly at market open, or when in the day were you placing those trades?
I'm trying to remember what we were doing when we were doing manual. Our strategy was way different when we were doing it manual, so I think the timing of it might have been different. Um, what we do now is we pretty much just play things to one target, right? So Monday open will happen. If it meets our criteria, we have a target. We just take the call or the put to that level. What we used to do is we had like two targets. We had an upper target and a lower target for the week. And whichever one we hit first, we would try and ride to the other one, right? So say on Ford, we had an upper and a lower target. If we hit that upper target, we would buy puts and try and dump them off at that lower target. It was really a bad strategy though, because like in probabilities, if you have two events, right? And say we're 70% sure we can hit the high and also 70% sure we can hit the low. The odds of success of that aren't actually 70%, right? When you're working with probabilities and you have two events, you have to multiply the probabilities. So it becomes closer to a 50-50. So the strategy wasn't performing well enough with multiple targets, and it was too complicated. What we do now is a lot simpler and a lot easier.
And is the automation process for stock options something that you also turn on and turn off, or is it something that just like runs all day when the market's going?
Yeah, it runs all day when the market's going. As long as we own something, the system will constantly be reading prices. It's kind of how it works is we have like all the exit targets just loaded in, and what the code is doing is it's just reading what's the price, what's the price, what's the price. When it hits that price, it sells it, or if it hits like our loss management, whatever, it sells it. But it's just reading prices. It knows the trigger points, and so the code is just waiting to trigger that order based on where the price is.
And does it only run on American market times? Like, is it 9 to 4:30, or it's 9:30 to
Yeah,
4:30?
we only trade on American stocks. We don't do anything overseas.
And that's 9:30 to 4:30, correct?
Yeah, Eastern time, 7:30 to 2:30 Colorado, or no, sorry, to 2 o'clock.
Okay. And just calling on something you talked about earlier that I wasn't aware of, you can trade. No, there are contracts of ETFs, or like those, like say there's an American growth fund. Is there a contract for that or no?
Yeah, you can trade options on anything if there's volume for it, right? The problem with some stocks is there's not enough interest to generate enough of an options market. But things like the S&P or like oil funds or all types of stuff, yeah, you can trade options on all of that. Pretty soon you'll be able to trade options on crypto. You'll be able to do like Bitcoin options, all of that. Again, the only thing an option is just someone writing you a contract saying that they will sell you something at a certain price, right? So you can do options on anything if there's enough interest and enough market there. And brokers love it, right? Because they want more activity and they want to move more things.
Like, what about ARKW? Like, are you familiar with Kathy Wood's ARKW ETF?
Yeah, you can trade options on that. I'm pretty
Really?
sure.
Because that's probably a pretty popular one too.
Yeah, you can trade options on a lot of the big stuff, right? Tons of market ETFs have it. All the major symbols have it for the most part. And there's a lot of volume out there, right? You can really inject a lot of money into options, because all the hedge funds trade options, all the major corporations trade options, right? So there's a lot of activity.
And what tickers or what like business segments do you think have the most action going on in terms of the options markets?
Um, I think the biggest option markets are some of the really big symbols, right? Like I think the top are like Tesla, Apple, SPY, the S&P ETF. So there's some of those really big ones that have the most, but you can find option volume in a lot of places, right? We trade across all the different sectors. Um, so we'll trade basic materials and we'll trade financial services and we'll trade consumer defensive, right? We'll be all over the place. So you can find it across almost anywhere, but the most is probably some of the bigger ETFs and some of the real big like household name companies.
Okay. So I'm curious, have you seen anything going on with Tesla recently? Because I think if Tesla falls a certain amount, Elon has a margin call and has to like put up all the money.
Yeah, well, it's been falling a lot because of his Twitter deal, right? Everyone who's a Tesla investor is getting nervous because he's putting all this capital and putting all this money away from Tesla and into Twitter. Is that an overreaction? I don't know. Is he selling stock? Sounds like maybe he is, right? Um, I don't know. I tend to think that in the short term, right, there's all these kind of overreactions and knee jerks to different news and stuff like that. And in the long term, the company's worth what the company's worth, and it tends to gravitate to that, right? So is Tesla really worse off now that Elon's going to own Twitter? I don't really know, right? But I guess time will sort of tell with that.
And what do you guys need to return to be profitable? Like, do you guys compare yourself to any indexes in terms of like returns or any options or like other options programs you compare yourselves to? Like, what percent do you need to return for it to be like smart to keep doing it?
Yeah, we hope for some pretty aggressive returns. Our hope, and time will reveal kind of how good we are. Our hope is to do around 6 to 7% a week on average. Now that might mean that winners look like 10 to 14%, and losers look like you know negative 15 to 10%, and the winners happen more frequently. There's this kind of balance. Um, we turned this thing on for the first time last year in September, and we really didn't have it working right until last December, right? So we're pretty new at it. Some of the early results have looked good, and then we've also run into some challenges. So we're just trying right now to, fix the problems as they arise and get more time under our belts, get more data under our belts, see how good it really is. But I know it sounds aggressive, but I do believe and I do hope that we can do somewhere in that 6 to 7% average range.
And so that would be a 6 to 7% year to date return if you look at it over a year time period.
No, it'd be a lot more than that because we want that a week, right? And so we
Oh,
want to compound like we can't play every trading week, but we want to compound that like 45 times, right?
not bad.
And it's not a clean compound because you have losers, right? But we would hope that it all average out to around 6 to 7 every week.
And so what would that look like year to date?
I'm not fully sure. So like the first quarter of this year, we made 50%, which was really good. And then we ran into a problem and we blew up a lot of the money we won, right? So now it's building back again. Um, if it was 6 to 7 a week cleanly, it would be a big multiplier. It would be big year to date. It would outdo a lot of hedge funds and stuff like that, right? Which is why I know it sounds aggressive and we still need to prove it and get more time under the belt and fix these problems we have, right? But yeah, it would be a big time. It would be a big time multiplier, and it would definitely keep our business partners excited.
Definitely. And so the business partners, are those people you met organically? You brought up the guy in Chicago, but how do those relationships affect your day to day? Do they kind of let you guys run it and they provide capital, or are they also kind of on the ground floor with you guys?
So those guys aren't really involved in any of the day to day. My dad met the guy from London um, through some stuff he was doing in the sports world, and kind of what their deal is they want to be involved in the current strategy, right? So they've dedicated some capital to that, and we're talking about doing more, which would be great. They want to potentially find a retail avenue for the stuff we're doing, right? So maybe it's like putting out an Excel sheet to, subscribers that says, "Hey, here's our targets for the week," or something like that, right? So they're they've been long time traders, so they're interested in the retail perspective of it. And then they're also interested in just looking at the data and saying, hey, what other strategies, what other things could we develop with this sort of data? But in terms of like actually building it and the day to day of it, they're not really involved in that. They're more involved of the future perspectives of it.
Okay, no, that makes sense. And they'll like obviously if you guys get big, they'll probably walk into board seats and stuff like that.
Yeah, I don't know what we'll do. I think we have been talking about so there's the company Apollo that is my dad and I's, right? What might end up happening is if they really get on board and want to do stuff with us, what will probably happen is a second company will be built and where people just share equity on that, and then we maintain the core Apollo is I think what would be the most likely thing to happen.
And so the retail side, this is what it sounds like for me. Correct me if I'm wrong, but so people will subscribe to the Apollo algorithm pretty much and will pay you guys to be able to use your research and your like market outlook.
Honestly, I don't fully know, right? We have very much not been paying attention to the retail side, right? We've been so head down focused on getting it to work for us, right? Because if it doesn't work, right, no one's going to buy it anyways, right? So we want to make money. We want to make money ourselves. So that's the goal right now with us. They want to do that because they're longtime traders and they have buddies in that world and people they know in retail markets, and they think it would make sense to do it there. What that would actually look like, I'm not fully sure. But if we were to do something like that, it would be more so just putting the data, putting or building what they need and putting it in their hands and seeing what they do with it. I don't know what the model would be.
Okay, that makes sense. And so I'm guessing you put a lot of your own money towards Apollo. Do you invest in anything else outside of Apollo?
Yeah, I have some I own some mutual funds. It's pretty much just glorified savings account, right? I very much am against the idea of just having a savings account and holding cash, right? So, so I will, instead of having a cash savings account, I will just dump things into mutual funds. It's just very safe and slow growing mutual funds that I set up, or that I put some stuff in.
And you were a huge Roth guy, correct?
I'm actually not.
You were when I knew
Roth,
you. Like I remember when, like, sorry I cut you off, but I remember back like a few years ago, you would drive Uber Eats to be able to contribute like 50 to 100 in your Roth every month.
yeah. Well, I have a Roth IRA. The reason my opinion has changed on it a little bit is, well, one, it makes a lot of sense, right? You can grow a lot of money tax free, right? That's good. Um, the reason I'm against it is I don't want to hold money off until I'm 65, right? Like I don't want to make a bunch of money when I'm 65. I want to make a bunch of money when I'm, in my 20s or 30s or 40, whatever, right? So if I can't touch it for that long, it doesn't really do me that much good, right? I'd rather have it now, contribute it to a business, contribute it to something else where it's a little more free and not so locked down. If you're okay with having it sit there until you're 65, it'll make you a lot of money and you'll get it tax free, right? That's a big advantage. But the reason my opinions change is I want to maneuver things more quickly.
No, yeah. And especially if Apollo is returning 50%, there's no point in having it in a Roth.
Yeah, well, hopefully, right? We'll see what happens with Apollo. But yeah, if Apollo does start really kicking ass, then yeah, I mean, it'd be dumb to have it in the Roth, right? You just put it all in there.
Yeah, I'm trying to pull up this tweet. There's this tweet. I literally, since I've seen this tweet, I'll never put another dollar in the Roth.
Your opinion's changed.
Yeah, no, I put way too much money in my Roth. I'm pissed about it. Now I just have like thousands upon thousands of dollars tied up that I can't touch till I'm 65.
So why did your opinion change on it then? Same
This
reason?
no, this tweet. It was what's the point of an IRA if you never woke up to a supermodel girlfriend type once?
Yeah, that's a good point, right? I mean, you kind of that's another reason for the money now, right? It's you're not going to have it when you're 65, so
Yeah, like you might as well have money now while you can like be dating a supermodel type. Like obviously, like I'm not doing that, and most people aren't doing that. But like, I'd rather keep as much money possible for if that were happening, than have it in a Roth IRA that I'll get to either take out a house or use for like a trip to Savannah with like my elderly wife when I'm 75.
yeah. Money is definitely money's always worth more now than it is later, right? Um, Even if it grows a lot later. Well, there's always a trade-off of the freedom of it versus locking it down.
What's that? Is it present value? What is it, theory, or what's that? It's an econ thing. I should know this, but it's present value something's like along that lines.
Not sure what you're talking about.
Yeah, no, talking about the wrong guy about econ. I'm graduated with honors in econ, but I have no idea what any like basic economic principles are other than supply and demand. I've got supply and demand down.
It's all right. I mean, when you're gonna start working, you're gonna realize that pretty much any job you do, you're gonna learn how to do the job, and the textbook econ stuff won't take you all that far, right? Like my day to day is all options, and I didn't know what an option was from any class I took at Colorado College, right? If you're off, you know, doing something entrepreneurial or working a job, whatever you're doing, right, it's probably not going to matter all that much.
Yeah, sure as heck doesn't matter for the podcast. I could just bring people on to talk about it if I need to.
Yep.
Yeah.
Yep.
So you brought up Colorado College. Let's dive in a little bit to your educational experience. So you were an economics major here. What made you want to major in economics, and what brought you to Colorado College?
Yeah. So what brought me to Colorado College was I really just wanted to play college basketball. Looking back on it, I think more the desire was just, I thought it was like a really good slash cool kind of life accomplishment thing, right? Because then you can go the rest of your life saying like, yeah, I played basketball in college. I always kind of wanted that, and so and I also wanted to stay in Colorado, right? So D3, good school, Colorado, it all kind of mashed together perfectly. So that's kind of how I ended up there. In terms of choosing economics, for a really long time, I thought I wanted to be a lawyer. Um, and so if you want to be a lawyer, right, you're kind of either doing political science or economics or business. There's no strict business major at Colorado College, so it was either economics or political science. And I think I did a little bit better with economics, so I just kind of gravitated towards that.
And what would you say about the liberal arts education? We had another CC grad on here a few days ago, and we talked a lot about the liberal arts. So what would you say about the liberal arts in general after going through it for 4 years?
I don't know. My opinion on college in general, I think it's less about learning. I think it's more about a credential, kind of a status signal thing. More about proving you can do the work and kind of more about having fun than it is actual education, right? Um, I don't think Colorado College is kicking out a bunch of geniuses who know how to go do their jobs immediately, right? I think they're kicking out a lot of people who have a credential that will get them a good job or get them into a grad school program or whatever it may be. And I don't think that's exclusive to Colorado College. I think that's most college. I think it's more about proving you can do the work and getting the credential more than about learning.
Yeah, I do think that the liberal arts system does breed like critical thinking skills. I think like especially at a school like Colorado College, like you cannot hide there. And you deal with a lot of like cool course material. I'm not sure how you felt about like the material you encountered, especially like outside of economics classes. But some of the stuff they assign you to read, like obviously I personally disagreed with it, but like there is like great works that they assign at school.
Yeah, that is a good point. I liked your nothing to hide point, right? Because at Colorado College, where the class sizes for the most part are so small, you're right. You do really have to be on top of the work. If you're at if you're at CSU in a massive lecture hall, right, it's easier to kind of sink into the background and not take it as seriously. Colorado College is more intense in the fact that obviously the block program moves fast. You're in a smaller class. The material is probably a little bit harder. So from that perspective, I think you're absolutely right. It probably is um, more intense than maybe other schools. But like I said, I still think regardless of what they assign, even if it's good stuff, it's not really anything that prepares you for jobs, right? I think you can look at most jobs that people will be getting out of college, and I think very little you actually learn about in college in terms of doing that work.
Yeah, no, that's fair. And the person we had on last week was obviously he's a politician or wants to be a politician. So like it actually did prepare him for his line of work, but for almost every other line of work, I would say the liberal arts doesn't do the best job of preparing you to do any particular job.
Yeah, that's interesting. And yeah, I am generalizing, right? Because obviously I'm looking at it from my point of view, a job that didn't have any um, impact from college. But maybe other people will have that experience and think differently. But I tend to think that that'll be true in a lot of cases.
Definitely. Well, one thing I definitely want to touch on with you on is your 52 book challenge. So, just for some background for the listeners, I live with JJ, and one year I think you started in October, correct?
Yeah, it was October or November of like a couple years ago, something like that.
Yeah. And so JJ set out to read 52 books in 52 weeks. And as a roommate, it was one of the most impressive things to see because Like they were nice. We wanted to go out, and he had to crank books, and also like, and rightfully so. Like JJ was reading some great works, and he learned a ton that year. But I just want you to tell our listeners about what that did for you as a person, because I've seen a noticeable difference in like who you are since you did that. I don't think it has anything to do with the type of content, just how proud you felt in terms of accomplishing something like that.
Yeah, sure. So the reason I started reading was I remember there was a time in college when I just started to get a little nervous about my future success in different areas, right? So I wasn't really sure what to do in terms of like, money and I guess even fitness and relationships, all different types of stuff, right? I was starting to get a little nervous about what the future held. And so I saw this video from, I think it was Mark Cuban, and one of the things he recommended to help become more successful was to read, right? So I was like, all right, well, I'm going to start reading, see how I like it, start reading about things that interest me. And I guess the way I kind of kept myself accountable was I was like, I could do one of these a week, right? And if I really want to start taking future success more seriously and start learning things, uh, the way I held myself accountable was trying to keep up with that pace of doing one a week. So I did do that for that 1 year. I did finish 52 in a year, which was great. I learned a lot. It was one of the best things I ever did, actually, I think. I think if I didn't do that, I'd probably be in law school right now, not doing this job. But I don't do that anymore because I think it's more about quality than quantity now. And I also don't think I need that that kind of quantity control to keep me honest about reading. But I still read a lot, and I think reading is probably the best decision I've ever made. I've learned a lot from it.
Yeah, no, the Safe Spaces pod loves reading. Like myself and Government, who's my other host on this, is a big are big readers. So we love talk books. So just from you, what's your personal Mount Rushmore of authors?
Yeah, Mount Rushmore of authors. I don't know if I have a Mount Rushmore of authors, but I do have a couple favorite books. My favorite book ever is Almanac of Naval Ravikant. Very, very famous book. Love it because I think a lot of people kind of get tunnel visioned in life, and I think that one's all about balance, right? It's not just about making money. It's about being happy. It's not just about being happy. It's about deeper meaning, philosophy, stuff like that. I think balance is important. I love the David Goggins book. I know you do too. A couple other ones come to mind, but in terms of authors, I don't know. I've read all over the place. I'm not really I've never really dedicated myself specifically to one author. I like to try and bounce around and find some variety.
Definitely. I got to read that Naval book because Naval is one of my favorite Twitter personalities, and I have not read his book. And apparently it's an easy read too. I made us download the audiobook or ebook tonight.
Yeah, that one you can get the book for free because he actually didn't write it. This guy named Eric Jorgensen. All he did was he took like podcast excerpts and tweets and all different stuff that Naval has said in the past, and you just put it into a book. So you can download it for free. You don't even need to buy it. But yeah, I love that one. I think that dude has more wisdom and things that have resonated more with me than anything else I've ever come across.
Love it. Yeah, no. So we're actually in the midst of starting a book review segment of Safe Spaces. So we have like the Safe Spaces conversations, then we have the Safe Spaces interviews like this, and then we're gonna start Safe Spaces book reviews. So if we do a Naval one, you may need to hop on.
Yeah, sure thing. I absolutely love that book. Absolutely love Naval. Believe in what he says. So yeah, totally would.
And so you mentioned fitness at one point. I know you recommended the 4 Hour Body to me because you're a big Tim Ferriss guy. And I read like sections of that books that were pertinent to like my situation. I didn't need to read the fat loss stuff because I don't care. But so
Yeah.
what are you doing for fitness now? Like retired athlete, year out. What do you do for fitness?
Yeah, I still work out a lot. I hit the gym um, at least 5 times a week. Um, do cardio pretty much every day a week. I guess the reason I did that is just I didn't want to fall out of shape when it comes to basketball, and I really think that people, when they start getting older, they start kind of caring less about fitness, which I think is a real horrible thing to do. I think your physical health is probably the number one most important thing in your life, right? Because if you don't have your health, you don't have anything. You can't be there for, your relationships. You can't exceed in work. You're going to be miserable. You're going to be upset, right? I think health has to be one of the number one most important things. So when basketball kind of left, I just really put it on myself to maintain and still grow my level of fitness.
And how has your body transformed since you finished playing basketball? Like what have you been putting an emphasis on, whether it's bulking? It sounds like you're doing a lot of cardio, so bulking is probably hard, but how has your body changed, do you think?
Yeah, I think I'm healthier now than I was in college, even playing basketball. It's not just working out; it's eating too, right? I think in college, I ate a lot of junk, honestly. So yeah, I think my body's in a better spot in terms of cardio, in terms of muscle, and in terms of a lot of ways, just because it's shifted into more of a priority for me um, as I've gotten a little older.
And so you thought you ate junk last year? Because I thought you
No,
ate
but
pretty
I
well.
think I did before. I think I did most of college, right? Freshman, sophomore, junior year. I think I think junior year was kind of when I started reading and learning and taking better care of myself in a lot of different ways. And um, I think that's when I started eating a bit healthier.
Yeah. And so one thing that I noticed that you did a ton was cook your own food. Can you talk about how that changed your health and how you like and your relationship with your body?
Yeah, I do cook a lot. I do it one because I think it's healthier than eating out, obviously. And also you can really control what you're eating, obviously, if you're cooking your own food. The priority for me has been trying to eat a lot of protein, a lot of healthier carbs, right? Not just empty carbs. All that stuff is a lot more easily controlled when you're cooking. I think the goal with whatever you're eating, right? It's really hard to manage quantity, but it's really easy to manage quality. So that's kind of been my focus with eating.
Yeah. And this is completely off topic, but you're a pretty focused guy just from what I've observed from living with you and being your friend. What's your social media usage right now? Because it can't be high with all the stuff you're doing.
Yeah, I do use social media a bit. I try to mostly use Twitter, right? I think Twitter's great because you can really, personalize it to things you care about. So like my Twitter feed has a lot of quotes, a lot of news, stuff like that, right? So when I'm on Twitter, I don't really feel like I'm wasting that time. But I used to have like Reddit, and I still have Instagram, but I use it a lot less, right? I think things like that tend to be more kind of empty information. But I use Twitter quite a lot.
Yeah, no, Twitter is unbelievable. And now I don't feel as bad about using it now that Elon owns it too.
Yeah, yeah. That's hopefully that deal goes through. It sounds like it will.
Yeah, no, there was a point where I was thinking about not using it if they didn't let the Elon thing go through because it just would have been like so disgustingly anti free speech if they like blocked that somehow. But no, it looks like that's all going through smoothly, which is nice.
Yeah, I mean, even regardless of free speech, how can you turn that down, man? It was a sweet deal. He was offering like 18% above the current market price of it, right? So um, I think yes, it's absolutely great for the app and free speech, and I think it's a good path to take. But even if you were ignoring all that, it was a hell of a deal.
Definitely. No, and if you look at some of the price targets that some of the major research firms did, the price target was like 30, and I think he bought it out at like 54. So like the
Yeah,
shareholders really got paid, which is nice.
yeah, they definitely did.
So this is a question I have for you in terms of the listeners that may want to get into reading like you did. What do you think is a good first book to start off with? Because I think one of the main things about reading for people that have been out of the game for a while is finding a book that they can really like dive into. Like, what do you think is a good book for someone to start off with?
The absolute best book is the one that you care about, right? The one that you can't put down. When I started reading, I really cared about money, right? So I wanted to read something financial, something in business. That's what really gauged my interest. But if that's not your interest, you're going to pick up that book and you're going to be bored out of your mind and you're not going to want to read, right? If you're interested in fiction, you should read fiction. If you're interested in psychology, you should read psychology. I think every person has their own independent set of skills, right? And you should only be reading things tailored to what interests you and tailored to those set of skills. You'd be wasting your time to do anything else.
And now that you're out of the 52 book challenge, do you finish every book you start? Or if you start a book, will you like abandon it if you really don't like it?
I've only had to abandon a book a couple times. For the most part, I try and finish it, just because I kind of think that even if most of the book isn't great, right? If you get a couple interesting things from it, it's probably worth it. But there's been a few times where I've read something that was just so bad and so useless that I just threw it away. But only a couple times.
And you shared some notes pages with me that you took on books so you could remember like their message. Do you do that on most of the books you read?
I don't really do that anymore, but I do sometimes reread things. I do write down quotes sometimes. Like that almanac book I told you about, the Naval one. I keep that in my house. I'll look at that probably every couple weeks just to remind myself of a few things in there. I don't do that for most of them, right? I just kind of read them once, take what I need from it, and be done with it.
Definitely. And do you see yourself uh, getting more into audiobooks now that you're working out a ton? Because it seems like you spend a ton of time in the gym. Could you work out to audiobooks, or is that something you can't do?
No, I'm very much not an audiobook guy. I think it's completely fine to do audiobooks, but I think when I'm reading something, right, there's a certain attention that goes into actually looking at the pages and reading, and you don't have quite that attention, or at least I don't have quite that attention if I was, working out or distracted doing something else. So they're not really for me.
Definitely. And do you listen to any podcasts regularly?
Yeah, I listen to Naval's podcast pretty religiously. I listen to pretty much everything he puts out, and then I used to listen to a lot of Joe Rogan. I don't quite as much anymore. I still really like him. I just have kind of gravitated a little bit away from that. And Tim Ferriss is probably the only other person I listen to. Outside of those three, I don't really listen to much else.
Do you listen to any Jordan P, or did you just read 12 Rules for Life?
Read 12 Rules for Life. Seen a couple YouTube videos from him, but that's about it. No podcast from him.
Yeah, he came to Colorado Springs this year, and I wanted to go, but the cheapest ticket was $250.
Yeah, that's pricey. Does he have a podcast though?
Yeah, no, he has some pretty good lectures. They're very long form. Like he'll put out a lecture that's like 3 hours. So when I was driving Uber Eats, I would just crank Jordan Peterson podcasts. But they're mostly
Really?
oriented around like responsibility. Like they're more biblical, but they used to just be strictly about like purpose and responsibility, which I'm sure his book was mostly about. I got to read that, but
Yeah, there's a lot of that in there. Yeah, it's a good book. That's interesting. Maybe I'll check it out sometime if you like it.
definitely. So we're past an hour. Is there anything that you want to get across to the listeners? Anything that you want me to touch on? Because first off, I want to say thank you for coming on. And like, if anyone wants to learn anything about stock options, this should be the first place they go to because I think you did a really good job of explaining the concept. But is there anything else you want to talk about?
Yeah, thanks. Anything for you, man. No problem. Anything else I want to talk about? I would just say that I know you're interested in entrepreneurial stuff going forward. That's kind of my path too. I would just say it is a really hard path. Just be aware of that if you're jumping into that, right? We have ran into a million code problems. We've ran into all types of different market problems, different execution problems, right? I'm sure if you're building a product, you'll run into all sorts of distribution problems and this and that, and all that. It's a hard path to go down, right? But the people who make it work, I think it's worthwhile. So that's all I have to say.
Yeah, and I want the listeners to take something away from your story and the fact that you and your dad just went out there and created a product that is making you guys money and that you guys enjoy working on together. And that, like, obviously there's a lot of different interpretations of the American dream, but working on a entrepreneurial company with your dad's got to be at the top of that list. So like for the listeners out there, it is possible. Like JJ is kicking it in a nice Denver apartment. He's living the life, going out with his friends, like spending quality time with people he cares about. But he's also doing something really cool with his dad and in such a non-traditional way that it should be inspiring to people listening to this.
Yeah, appreciate you saying it. Hopefully in next few years we'll be kicking some ass. We'll see what it does.
Yeah. No, well, JJ, man, thanks for hopping on and this was great. So hopefully we'll get you on the pod another time, whether it's for a book review or you hop on for a conversation at some point.
Of course, man. Thank you.